Welcome to the ActivTrades Monday Market Matters webinar for the 12th of February. It's Paul here, and today we're going to be talking about trading a squeeze, both as a long squeeze and as a short squeeze. Fabulous to have you all here this afternoon. I hope you'll take a great deal away from our informative webinar. Just before we begin, as always, I just want to confirm that the technology is working with us rather than against us. For those of you joining us here live today, it would be great to know, those of you, to make sure that you can see the slides and that you could also hear my voice. If you'd be kind enough just to pop that in the chat box there, I'd be much appreciative of that. So just to confirm that we're on the right side here. So what should we talk about today? Well, we're going to talk about, what actually is a squeeze? It would be interesting to know, those of you joining us today, would you actually know what a squeeze is? And would you actually know how to trade them? It'd be great to know what, if any, experience you have of them, and you can put that in the chat box. I appreciate that we always have a wide range of traders here with us for our sessions. Some, just at the start of their journey, some very experienced at trading. If you're not sure of what a squeeze is or how you trade it, well, welcome to the session. That's what these sessions are for, to help educate traders and give them insight into ways with engaging with markets. But we'll talk about what is them, how do we identify them on charts, what do we need to be aware of with a squeeze, and how do we turn them into an opportunity for traders? And that's the important thing, isn't it? And as always, if there's time at the end, we will switch across to the live charts to have a look at how the markets are starting off this, where it'd be this morning for the American morning session of Monday. Just before we start off, just a quick moments just to make you aware of, if those of you who are in London or the Southeast, or who particularly wish to travel, you will find that ActivTrades are both speaking and sponsoring the London Trader Show on Friday the 8th of March. I myself will be there. I'll be doing one of the early morning speaking slots. I'll be talking about key reversal patterns, but you're very welcome to join us. And if you utilize the code ActivTrades 69, that will actually provide you with a complimentary silver pass, so you'll be saving £69 on a ticket. So that's Friday the 8th of March in the Novotel London West. So I've been very fortunate to have presented at these before. It's been great to meet some of the people who join us for our webinars, actually to put names to faces, and I hope to see a few of you there on the Friday the 8th of March. And if you're joining us for the first time, Monday Market Matters is really all our sort of Monday afternoon, regular webinar. The whole idea is to basically help traders start the week in the right frame as we prepare for the opening of the US markets in about 24 minutes. So every Monday, 2 o'clock London time, we take a look at the news that's upcoming for the week ahead. We do the main element on education, and as I said, today is going to be about trading a squeeze. We'll always have a little look at the ActivTrades platforms and tools that you have access to as a client, and we will finish with a look at the live markets as we start the US session for the day and the week ahead. So let's have a little look at the news to begin with. I make no apology, I say it every week. All right, if you're a new trader, I don't expect you to be able to provide, economic insight, or analysis of the economic data, but I do expect you to know when that news is coming out. And you can find that news that is coming out on an economic calendar. There is an economic calendar on the ActivTrades website and elsewhere around the internet, So there's no excuse not to know when the big news is coming out, because it's that big news that invariably can induce volatility into markets, and that can either make your trading, helpful or challenging. So as a good trader, you will know what news is coming out for that session, for that day, and for that week, so that you are fully prepared. And we've got quite a week ahead of us, so certainly quite a week ahead of us if you trade a lot of sterling like myself. But no, there was a good bit of data coming out. Last week was a little bit quiet, if you remember, but we are back into the groove this particular week. So as you can see, for today's Monday, there is a little bit of data coming out from Australia, but certainly for, let's say, for sterling traders, we have Mr. Bailey, the head of the Bank of England. He's speaking, I think, about 6 o'clock London time tonight, and so traders will be interested in that. And as I said, we have quite a bit of data coming out of the UK. All right, so tomorrow we have the basically UK employment data, so that people will be interested in that. And as you can see, we also have the ZEW indicator for economic sentiment in Germany. And we've got some Australian data, but perhaps the kind of the biggest news will be the US inflation figures, the CPI data, which would be tomorrow afternoon for those of us trading in sort of Western Europe and early morning in the US time. Okay, and people will be interested to see if whether the current trajectory and narrative is maintained based upon that data. On the Wednesday, we have, that UK data, okay? UK CPI comes out for that. And we also have Mr. Bailey speaking again in the afternoon. We also have Japan releasing its GDP figures. The UK releases its GDP figures on Thursday, along with us also seeing the kind of US retail sales, Australian employment figures, and the Empire State Manufacturing Index for New York. Friday, once again, we have UK data. So there's something happening in the UK every day this week. So in the UK, we've got retail sales, but as you can see, also there's French inflation data, US building permits, and the PPI as well, along with the University of Michigan Consumer Sentiment Index. So, as I said, there is a good bit of data coming out, and there is something happening every day in terms of the UK. So of course that will have an impact on if you trade sterling, and also the FTSE as well, and also an element of the sort of how it plays into the overall risk sentiment that we find ourselves in. So as I say, it is important to know when that news is coming out. Make sure that you check the economic calendar, okay, because you don't want to be caught on the wrong side of that. So bits of news done there. So let's switch to the kind of educational piece for today's, or rather this week's session. As I said, we're going to talk about how you trade a long or a short squeeze. And as I said a bit earlier, as I pitched a bit earlier, do you actually know what a market squeeze is? Do you know how to trade it? Do you have experience of such? And as I said, I appreciate, we have a broad range of experience of traders who join us for our sessions. Some people will be finding it, great levels of experience. Others are at the start of their trading journey, okay, and that's what these sessions are here to help you. But with regards to a squeeze, knowing the how, the why, and the where they play out can be beneficial for a trader to know. And so in this session, we're going to learn everything we need to know, like how to spot them on our charts, what happens during after one, and how we could trade them ourselves. All right, and there'll be lots of people who I would suggest, would have different ways and means of actually trading them, and that's absolutely fine. I think what's important is to recognise when one is occurring, because if it's occurring, it might actually help you in terms of managing positions that you're already in, or it might sort of just alert you to the possibility of an opportunity setting up, and that's what we like as well. Okay, that's what we like to see. So we'll be able to talk a good deal about that in terms of understanding, what it offers us. So let's talk about what a short squeeze is. Let's start with the short squeeze, which is the bullish opportunity. So which we'll explain more about in a moment. So what we want to do in terms of understanding what is a short squeeze is that a short squeeze occurs when a stock or other instrument, so it could be, whilst we see it a lot in stocks, it could also happen in indexes, can happen in FX, can happen in crypto, can happen in commodities. Okay, a short squeeze, okay, bear squeeze occurs when a stock or other instrument jumps sharply higher in price. All right, jump sharply higher in price. And there can be various reasons for that. But what it does is it forces short sellers to exit their positions to avoid greater losses. Now, if you think about that, if you're a short trader, okay, if you're on the short side of the market, to exit your position, you have to do the exact opposite, don't you? You have to buy the market. So if price is already shot up in price, by all of those short sellers having to flip, having to close their positions, they cover their positions, they have to now buy the market, and that adds to the upwards buying pressure, forcing prices even higher. And so here we go. Let's have a little look at this drawing tool here. Just bear with me 1 second. this has been in a quite clear downtrend. Okay, quite a clear downtrend here. It doesn't, there's no sign of what instrument or what time frame it is, because it doesn't really matter in the sense of you want to be able to recognize these across any time frame and across any instrument. But we can see the price has been in a quite clear downtrend, and it looks like it's going to continue. It looks like this kind of wedge, descending wedge, looks like it's going to continue. But then actually what happens is we get a little inside bar, and then bosh, we get the next day, from where we close to where we open, there is already a gap up, and you can see price rallies up strongly. And it rallies up strongly, above the sort of kind of the closes of the previous session's candles. As I said, doesn't really matter. This could be a 5-minute chart, it could be a monthly chart. But what we see is that there is a squeeze has occurred. Okay, a squeeze, which is effectively what it's doing is it's forcing all these people who are short here, who've probably got short here, short here, short here, short here in particular, to basically to exit their positions. They need to cover their positions, which means they need to be a buyer. And then that's what happens is, that just adds to the pressure. We can see that actually price moves up and gaps up, okay, because effectively everybody's switching from being sellers to be buyers, and that upwards buying pressure, well, that forces the prices even higher. So that is a basic description of a short squeeze. Okay, you're getting short sellers, they're getting squeezed, and they get squeezed to the point where they need to flip their position. Okay, they need to close their position, which means they need to buy, and they need to cover their position off. So when we're looking to try and understand it, and I think it is it's always useful to understand what's going on underlying the market. Okay, we can look at we could look at chart, we can look at candles. That's we could look at a line of support and resistance, and understand that it may have bounced, or it may have turned, or it may have converted. But I think it helps understand what is actually going on in the underlying market, right? And as I was just saying before, those short squeezes, they happen when short sellers are being squeezed out of their positions, normally at a loss. Okay, those will be the first people who feel the squeeze. Okay, the ones who probably may have, in this case, they might have sold here. Okay, the sort of breaks to new lows, they've sold there, and they are the ones who, as soon as that price has turned around, they're the ones straight in a loss. Okay, and because they're in a loss, what invariably they're doing is that they they basically have to take some action. Okay, they have to look at it. Remember, those short sellers have been opening positions in instruments they think will decline in price. And for whatever reason, all right, there is a turnaround in that price decline, and every buying transaction sends the prices higher, forcing those short sellers to cover their positions. And that's the kind of important thing I'd like you to just pick up, for whatever reason. Okay, short squeezes can happen for a multitude of reasons, depending upon the instruments you trade and the timeline you trade. Okay, maybe it's a particular level of in this case, a particular level of support that there's been a false breakout from. Okay, and a false breakout is a great way to sort of see and trade a short squeeze. Maybe there is some geopolitical news that comes out that basically changes the picture. Maybe there's been some economic data from the economic calendar that's come out that has changed the picture. For whatever the reason, okay, there has been a turnaround in the price decline, and that's it. That's what we need to understand. There's been turnaround in the price decline, all right, and as it says there, every buying transaction is sending the price higher. And so those people, especially the ones who've been late to the party, the ones who've shorted here, they're in profit, and so they can take their time. But the people who've been shorting here, they are probably in losses, okay, and they are the ones covering. And then basically, as we said, they're to cover, they're having to buy, and that is what's driving prices even higher, okay, and that's what just accelerates that's what accelerates the reversal. So, of course, as traders, we want to look at, well, two things. How can we identify where short squeezes are occurring so that we are not caught in them if we're already a short seller? Or B, are there particular areas in front of us in the market that might provide us with an opportunity to see if a short squeeze occurs, and if so, to have a trade plan to take advantage of that. And so, hence why what we see is that the active traders, they are aware of the relevant news item. Okay, remember what I was just saying a few slides before. It's important to know when the news is coming out, because that might be the catalyst. Okay, that might be the catalyst that causes that sharp change in sentiment. They'll understand the overall sentiment, so they will know that if this case, the sentiment is highly bearish, they will also know that it won't take much to actually sort of flip the coin, to flip the sentiment and flip the direction. And as I said, also aware of suitable technical levels. When you see and are doing your analysis, well, then there's an opportunity for you to identify where these particular levels are in front of where the market's moving to. So suitable support and resistance levels, suitable big round numbers, areas of supply and demand, etc. Being able to identify them ahead of the curve by doing just good analysis, it allows you to identify possible points for a squeeze to occur, and also to identify the price action that may transmit that a squeeze is occurring, okay, which allows you to, as I say, if you're already short, it gives you forewarning to start to covering your position, or B, if you're sat on the sidelines, might provide you with an opportunity to sort of get on board in terms of the next bullish move up. So it can provide two two ways of helping you, depending upon what side of the market you've been on. So it'd be interesting to know, of those of you joining us here today, does that actually help identify what a squeeze is, or when you hear traders talk about it, is it something that you think, do you know what, I've seen this before? You might have seen it on charts already, but not really understood exactly what was going on, or maybe not really understand the name or a label for it. But hopefully that's what's helping you with that. And so there's a few examples here. Okay. So this is pound. I've tried to pick up a couple of different sort of different instruments, different time frames. So this was one here. You can see here we were in a very clear downtrend, weren't we? Very clear downtrend, and we had here in front of us a big round number. At the time it was 120. Okay, 120. That was a big round number, treble zeros. But we can see the price was working its way down to there, and it got close to it. Okay, it got close to it, came down, bounced up. But what we came down to here is we came down. Okay. And actually, what happened was we put in firstly we put in a false breakout. Okay, we pushed down to the level, came back up, closed above it, printed a rejection candle, and then the next day you can see that basically price launched itself higher. Okay, there's probably lots of people who effectively had all sorts of orders around that big round number, and what we can see is that basically the buyers stepped in for whatever reason. Okay, it could be a multitude of reasons, but hopefully you can see that. It's clear. So hopefully you can see that having price coming down, it then effectively as part of a double bottom as well. Okay, a false breakout, it launched itself. Okay, it launched itself up, had a little rally into, or rather a kind of fall back into a bullish flag before we fired ourselves away from there. Okay, and hopefully you can see that we went from 120 to very highly, very quickly back up to the sort of 130 area, even higher than that off that particular move. So when you can see, as I said, you want to be able to identify the trend, identify the sentiment, which here very bearish, but also identify in front of it the kind of levels where a squeeze may well occur, because as I said, it's a confluence of events, 2, 3, 4 things coming together at time and place that give you that particular opportunity. And that's what that's why I said doing good analysis, working out beforehand, where are the kind of levels where price might particularly make a move, may shift, that can help you enormously as a trader. So here is this is the Russell 2000. This is on the weekly chart here, okay, and we were in a significant downtrend, and price had been in a very strong bearish trend, and the candles here looked like it was pushing lower. 1700 was a kind of 1700 and 2000 or so have been big numbers, and at the towards the end of last year, what we saw is price looked like it was going to break out of that 1700 level. But hopefully you can see here that actually what happens is we had a very, very strong turnaround. This was kind of the end of October, which is what we saw across quite a few of those American indices. And hopefully you can see that, let's just clear this. Having been in, a strong downtrend, we hit a very significant level. 1700, 1650 is an area that has been significant support, for many years. And, we can see Bosch, we turned around there very strong. Remember, this is a weekly candle. So that, that move is a very strong move there, right? That very strong move. And that's a lot of people who probably shorted here, may well have shorted here, but for whatever reason, they basically, it starts to turn around, and then as the people who are short start to cover their positions, it accelerates. It accelerates. So we had a very strong, a little bit of a week of reflection and reaction, and then before we move very strongly back up to this 2000 level, which in the Russell, which we'll look at in a moment, is a big level. So we can see that basically, lots of people were short, they got squeezed here, all right, that huge big candle there, all right, which basically just effectively was the squeeze going. And then once everyone realized, you can see it, the intensity at which price moved and how far it moved. It moved 300 points there over the next few weeks on the Russell, which is a big move for the Russell. Here's an example from gold, and this is actually on the monthly chart of gold. And as I said, I want to show that all sorts of time frames, all sorts of instruments. You can see that squeezes occur. What had actually happened is that we'd had a false breakout of the 2000 level, and then price had fallen down, and it had come back down to, once again, this kind of $1,700 area where we've had kind of support before, false breakouts, and this time it looked like we were actually sort of going to break through it. And there's probably lots of people shorting here. And we hit the monthly 50-period moving average, and price reversed. Price reversed very strongly. It reversed very strongly there, and as it reversed, what we saw is the people who were late to the party, people who've been shorting here, were covering their positions, and all that did is that accelerated the move higher. And actually, what we can see is that having taken several months, to sort of work our way down to that kind of level, within a few weeks we were back up to 2000. Back up to 2000. We had literally launched ourselves back up there, and that had come around from, as you can see, the absolutely size of that candle, a huge big strong candle at a level that we know prices bounced off before. That is also a big round number, right? You've got that confluence of events, 2, 3, 4 things all coming together at time and place that basically give you a little bit of insight into where a squeeze is most likely to occur. And here's another example of a short squeeze, and this is on the S&P 500 weekly chart. And what had happened is we topped out. It was the weekly chart. We put in a lower high, and then we were working our way down. And once again, we worked our way down to the red is the 50-period moving average. So if there is an area where there's a good bounce, the 50-period moving average can provide that. It's a good indication of fair value, and hopefully you can see here, but not dissimilar to the Russell setup we looked at, because they all occurred at the same time. People had thought that the selling was going to decline further, but actually it reversed, and it reversed very strongly. So strongly, in fact, that if you can see that weekly candle, we pushed back up above the 50, back above the high, back even above the open of the 2 weeks ago. It was a very strong candle, very strong bullish candle. That was effectively that sort of short squeeze. The short squeeze that had occurred there. Lots of people were short. Lots of people thought it was going further, and then basically price reverses. All right, and it reverses strongly, and that reversal just causes all the people who are late to the party, probably lots of people who, let's clear this. Lots of people here, having had this as a swing low, lots of people who probably sort of sold here, even though it was into the 50-period moving average, not something I particularly would do, sold here, and then what we see is the next week it reverses, and it reverses so very strongly. And as you can see for yourself, we've not really looked back since then, have we? That we continue to, having gone from sort of around about the kind of 4100 area, last week we closed above 5,000. All right, so a 900 point move there in the S&P in a matter of a couple of months, 2-3 months, and that's quite hopefully quite evident to see what actually occurs when we get a squeeze. And once again, to identifying areas, levels, places where a squeeze may well happen, and then once you start to see the price action confirm it, that's telling you, there's an opportunity to the long side. Okay, and that's what we're interested in. And this was just sort of a little bit of an example on the ASX. Okay, ASX Daily Australian Index once again here, big round number, 7,000 level, wasn't it? Every time it's coming back here, we've bounced. Okay, notice how it's bounced. Okay, so we know that 7,000 is a strong level of support, isn't it? And then what happens is, we top out here, okay, we reverse, and then we work our way down to the 7,000, and it looks, firstly, it looks like it's a false breakout, then it looks like it's going to follow through. And there'll be a lot of people who've probably sort of just thought, well, we're finally, here we are, we're breaking. And then the very next day, look at what happens there. Okay, we get a really strong bullish turnaround, and not only that, it's associated with a very strong candle, a really super strong candle. Okay, all the people who are shorting here have seen that the price is reversing, and with that, they are having to cover their position, and that is what basically shoots us up and away from there, right? And that's, as I said, it's that confluence again, identifying levels of support. In this case, that we've noticed before prices maneuvered off. And then looking at how the price action plays out in front of us as it does. When we get a really strong bullish candle like that, that's just confirming that a short squeeze is occurring, and there's a higher probability of price moving to the upside, and so we want to be in a position to be able to take advantage of that. And so just another example. This is the Nikkei on the weekly chart, okay, and having topped out, we had basically been working our way down, and what have we been working our way down to? Big round number, 25,000. All right, lots of salespeople looking at this, short people, and then during that week, we do push through 25,000, but even though it's a bearish close, we've closed above the 25,000. That is a sort of a false breakout, and then what we see here is the next week, don't we? Just basically, bosh, that's a complete reverse, that completely strong reverse, and you can see that is basically people who are probably short to the party, shorting here, okay, invariably as they have looked at to cover their positions. That is what's driven the price all the way back up to the 50, and that's, as I said, that's that confluence of events, looking ahead beforehand and identifying areas and levels where there's a likelihood, in this case, of a short squeeze to occur, so that we're in a position when we see the sort of very dynamic, very strong bullish price action come through to work with it. So just a couple of final points before we switch to the other side. So correctly timing a short squeeze, it can be very lucrative, but it requires a sound trading method to ensure that you can prosper from trading short squeezes. And remember, as always, with higher reward does come higher risk. So timing becomes very important, and recognizing the correct price action to identify the squeeze as quickly as possible. So, as I said, that's looking at ideally short squeezes we want to take advantage of are ones that where we can see that they are at levels, all right, which maybe big round numbers, very strong support levels that we have seen price react off before, and then looking for the price action, looking to see, does price action start to reverse? Can we start to see there's a really strong bullish close, because that's telling us that the people are covering their positions, their short positions, so they're having to buy into the market, and that is what's forcing prices higher, and that's what we're looking for, so we're in a position to take advantage of it. That was a short squeeze. Let's talk about the other side of the party, shall we? Namely a long squeeze. All right. So as you can probably imagine, a long squeeze is the opposite of a short squeeze, all right, which is what we've just covered. And a long squeeze occurs when a stock or another instrument falls rapidly and unexpectedly lower in price. And what that's doing is that forces long buyers to exit their positions to avoid greater losses, which means they have to do the opposite, don't they? If they've been a buyer, they now need to be a short or the seller to close their position And in doing so, that adds to the downward pressure, forcing prices even lower. That's what we're looking to sort of see, and we're looking to sort of try and take advantage of. As always, we want to try and understand a long squeeze. We want to understand what is actually going on in the underlying market. And, long squeezes, they happen when buyers are being squeezed out of their positions, normally at a loss, okay? It's normally the people who've been the last to the party who are invariably sort of just trying to jump out of their positions because their positions have gone underwater, pretty much straight away. And so they want to cover their positions and get out. And in doing so, that basically just drives the price even lower. So, and as I said, the same for the short, okay, in terms of the buyers, okay, closing their positions, okay, which they now think will decline in price, and it is a case of for whatever reason, right, there is a turnaround in price. Remember what I was saying, that for whatever reason, might be because it's hit a level of resistance, all right. We looked at that on the flip side in short squeezes. Might be that invariably there has been a change in sentiment. Maybe that change in sentiment has come around because of the news. The economic news is very poor, okay, or if it's a stock, their kind of earnings, etc., have failed to meet expectations. Or perhaps there is a bit of geopolitical news. Something has occurred that basically has changed the sentiment, changed the narrative, and that causes a very strong shift in the other direction, the opposite direction. So, as I said, there are a few elements of or rather reasons that can actually turn around the position and cause a squeeze. What we just want to do is just be able to understand, okay, when it is occurring, well, how can I take advantage of it? And that's what we want. That's what we want to be able to see. So, not unsurprisingly, in terms of recognizing a possible, long squeeze, okay, where the bulls are getting squeezed, well, traders want to be aware of the relevant news items. So, whatever you're trading, whether you're trading stocks, whether you're trading FX, whether you're trading indices, bonds, crypto, okay, commodities, whatever, you want to be aware of the relevant news items that are coming out. It just plays into what I was talking about earlier, namely, you always need to check the economic calendar. You want to be aware of overall sentiment, okay? If if everybody and his wife is long that particular instrument, well, it might be said that there is effectively people are overweight, all right, in terms of either their position or their sentiment. And also we want to be, it helps if there are also suitable technical levels, in particular, significant previous levels of resistance or the sort of significant levels of big round numbers, okay, that are there, because that allows us to identify possible points where a squeeze could occur, okay, and then what we're looking for to see, does the price action that backs it up, supports it, that is transmitting to us that a squeeze is occurring, and we want to be prepared to act accordingly. Just a couple of examples here, okay. So here's an example of the Russell Weekly, excuse me, there. Weekly charts, okay. I do a lot of work on weekly charts. I'm very kind of particularly like them, all right, and I find that squeezes occur on them a great deal. So in this particular case, what we had was for pretty much most of that year in 2021, all right, on the weekly chart, we had do my drawings again there. Apologies, I'm a better trader than I am an artist, okay? But hopefully you can get the idea. We're in mostly a pretty strong consolidating ranging market, and then towards the end of the year, we actually had this kind of false breakout. We got above a level which had acted as resistance, and invariably we came right back beneath it, and then that accelerated. Okay, and hopefully you can see that. People thought it was a strong breakout, but actually what it was it became a false breakout, and invariably all the people who were buyers here, all the bulls, they got squeezed, didn't they? This is a long squeeze. Okay, everybody who was long got squeezed, and what we can see is that once it turned around, it accelerated. Okay, in terms of its turnaround. And then that was the start really of the next 6 months of the trend, okay, off the back of that particular off the back of that particular move. So, we had a long squeeze there that occurred at, a break of significant resistance, all right? Break of a level that was very clear. It was a false breakout, and so we had, as I said, 2, 3, 4 things coming together, one time and place that gave us an indication that it was going to turn around, and we wanted to be able to sort of take advantage of that. So, as I said, they can occur for a multitude of different reasons, but if you're doing good analysis beforehand, you will be able to start identifying levels where the chance of a squeeze is more likely than not to occur. This was one on Bitcoin, okay, and it kind of, I was interested in this because there's quite a few reasons I was interested in this, because Bitcoin, okay, this is well, you might say back in the good old days, where we may be back again in a short while. $60,000, okay, and we can see that price had basically butted up against it. We'd actually put in a false breakout there, and you can see there was a little bit of a long squeeze there, okay, the way that kind of worked its way back down to the 50 period moving average. And then what happened is we came back up to that level, all right? We came back up to that level, had a false breakout. Then we had another false breakout, and look at the candle afterwards, okay? Candle afterwards, we had a real turnaround there, in terms of turnaround from the highs, also closed beneath the 60,000 level, big strong candle, which then continued, which basically continued, once again back to the 200 period moving average down to 20,000. We went from 60,000 to 40,000 to 20,000 or 40,000 point move. But it was a case of, the people who had been long, they were sort of buying the kind of the breakout, okay, of the previous level. It invariably, those people, probably the late people to the market, probably buying above 60,000, and then once the price had started to turn, they basically had to cover their position. So they were long, they were now covering it short, and that's why we start to see that really strong bearish candle, that real strong bearish candle move. Okay, that was giving us an indication that we were not. We were certainly not going any higher at all, and that's what we're looking to work off. This was in ASX, okay, the weekly chart, okay, the Australian index once again, sometimes you can see it when you're just looking at charts, okay. So firstly, we had our first long squeeze here, okay. Price looked as if it was going to break out, and then basically it dropped significantly, it fell all the way down to the 200 period moving average. And then what did it do? It put in a really big, strong bullish candle back above the 200. That was a real bear squeeze, a real short squeeze. And then we continued to work our way up. Right? We worked our way up until we sort of, broke the previous year's highs, putting in our double top there with a pin bar, and then we can see what happened here. Bosh. Hopefully you can see how that effectively, that was a real covering squeeze. Now this was coming into the start of the COVID pandemic, so you had also the other reasons why basically traders wanted to basically cover their long position. So that in that particular case, that was the indication of a specific geopolitical event that happened. As basically as markets got scared, as a whole nation started to close down. Well, then basically we saw the price absolutely collapse there. Okay, and that's what we were looking at. That was just a very different version of a squeeze. Okay, so as I said, it can happen because of a level. It can happen because of a change in the economic data, or it can happen because there is a geopolitical event. In that case, that was very much a geopolitical event that brought that long squeeze around, and that's what we were looking at there. So just a few final points on a long squeeze, namely that correctly timing a long squeeze can be a lucrative trading opportunity, but it does require those sound trading methods to ensure you can prosper from trading long squeezes, okay? And as always, remember, with higher reward comes higher risk. Therefore, timing it becomes very important, and being able to recognize the correct price action to identify the squeeze as quickly as possible can be enormously helpful. So this is why I'm always talking to traders about getting yourself into a good a good method, into a good process, so that you're constantly drawing in your levels of support and resistance, so that you're identifying particular levels that may well make you be ready for a squeeze to occur. There's a higher probability of a squeeze occurring, in which case, once we start to see rejections, and once we start to see reversals occur at those levels, that can give us an indication that squeeze is occurring, and that allows us the opportunity to sort of prosper from such opportunities. And that's ultimately all we want to be able to do. So I think there might be one or two charts here on just on multiple squeezes. Multiple squeezes, how they have particularly occurred. This was gold, which was one of the particular ways we see. Once again, big round number 2000, right? Having price having kind of rallied its way up into it, it performs a false breakout, and then what we see is price starting to basically reverse. There's basically a long squeeze occur again. Price pushes up to it, just taps the level and reverses. Once again, that's another long squeeze has occurred. Prices are pushed up, and then basically they've had to cover their positions, and that's what we've seen there. That's kind of double top. It's a false breakout. It's at a big round number. That's giving us an indication. And then actually what happens is we see price works its way all the way down. Works its way down to, once again, kind of 1700 level, which is a significant level we talked about. And then, here what we have is, we kind of actually have a triple bottom here. And it's the kind of the final element of that triple bottom where prices come down to this, it's around about 1630 level, and we basically had a really strong reversal candle off it, really strong reversal candle off it that basically gave us that print. That is a bullish engulfing candle, bullish key reversal candle. The following week, it follows through, and then actually what happened is that we've dropped, and then we launched our way back up to 2000 again. So as I said, identifying the levels, again, identifying the price action where it will occur, and watching to see how the price flows through to basically take advantage of when we see traders looking to cover their positions. That's the squeeze happening, and then being able to sort of see and work with that ahead is a fabulous opportunity for us as traders. So just before we switch across to the charts, just in conclusion, a short squeeze occurs when an instrument share price rises rapidly due to short covering. Short sellers will cover their position to stem deeper losses, and they're forced to buy the market to cover their shorts, which drives price higher. A long squeeze alternatively occurs when an instrument's share price falls rapidly due to traders covering their long positions. Long buyers, they will cover their position to stem deeper losses, and so they're forced to sell the market to cover their longs, and all of that activity is what drives prices lower. So good contrarian traders will look for opportunities to profit from squeezes setting up. And as I said, the timing is key to ensuring you get a good reward to risk. You also want to have a good understanding of price action, so you're in a position to read the market and analyze. And as I said, you should generally treat it as a short-term trade, but as I showed there in a few of the weekly, even the monthly charts, etc., squeeze can occur and it can run for weeks and months. But as a general rule, you could look to treat it as a short-term trade. So, with that in mind, why don't we have a little look at the live charts to finish our session off for today? Before we do, just a reminder that Monday Market Matters will be back next February. All right, next week, which is the 19th of February. Monday Market Matters, we're going to talk about how best to use moving averages. So lots of people use moving averages. A lot of people don't use moving averages because sometimes they get a bit of a bad rep. But what we want to do is to explain what they are and how you can use them best to help you with your own trading decisions. So I hope you'll join us there, 19th of February, 2 o'clock London time. If you're not registered, you can either go onto the website or take a shot of the QR code, and that will help you with that. So let's switch across to the charts, have a little look at how the markets have opened for the week. The American market have opened for the week. But as always, if you've got any comments or questions, and then what we'll look to do would be, you can contact us. You can call English Desk 0207 6500 567 or email englishdesk@activetrades.com. Okay, and they'll be happy to help you. So if you just bear with me for a moment, we'll switch across to the ActivTrades platforms, and we'll have a little look at what the markets have showing us up for at the start of today's session. So just bear with me a moment, and we'll switch across. Okay, so here we go. This is just the ActivTrades, one of my ActivTrades platforms, and the charts here, and we're just looking at the indices. I have a profile here for the indices, so I have the Dow, the Russell, the Nasdaq, and the S&P 500 here. Okay, the four major indexes. They're all offered to you to trade through ActivTrades. Let's have a little look at what's been going on there. Okay, so if I look at the Dow. A bit like the sort of S&P that we looked at, on the weekly chart, there was that was a real short squeeze. Okay, the shorts got squeezed here, and it flipped and reversed, and now we can see how far it's run up there. But what I'm looking to see is last week was a bit of a doji, so let's have a look at how are we doing, okay, in terms of setting up our week here. Let's have a look. Just go down to the time frames. Just have a look at so we can see that we've had a bit of a bullish opening there, haven't we? So we'll just be basically just looking at understanding the levels here. Let me just change these. Drawing. Okay, here are the sort of high of today's electronic session. We'll be looking at there. I just wanted to see how it is. So it's so we see it's opening. It's there's a bullish open to that. Okay, the bullish open to that. I'll just look at that. We'll come back to that in a minute. If we look at Nasdaq, okay, Nasdaq bus, it's just been racing its way up there, hasn't it? Absolutely racing its way up, and we can see that there's been some real kind of moves there. Okay, the daily chart has been in a great trend for a few particular months here, but we're just looking here on an intraday basis. So yeah, I'm always, as I said, I always normally sort of give, even though the market's open sort of 2:30 UK time, or looking at the 9:30 open there, I'm always just basically, as I say every week, the first 15 to 20 minutes, I'm actually normally very happy just to let it play out itself. Okay, I don't because especially on a Monday it can be quite volatile after the weekend. Especially there's lots of traders who are probably in Las Vegas for the Super Bowl. They might be more active, okay, at the open today, or maybe less active if they've had a good night or a bad night, depending on it. But what we're seeing there is that we're already tapping down into the kind of the European session lows there. Just looking at that on the 1 minute time frame. So as you probably, if you've been here, if you've been here before, okay, I'm always a bit. When the indexes are doing the exact opposite, I'm always a little bit nervous. I'm always happy just to let the trades, let the markets settle down a bit. I prefer for them to all to be sort of moving in unison. That suits my particular style. I know others might be different. S&P 500 dailies, that's just been very, very nice there. S&P's been a little bit more quiet to this. I'm just looking at what would have been the pre-market highs there. We're just looking at that. I think. Okay, so the Dow has been bullish. S&P has been probably a bit bullish. Nasdaq was bearish and stuff, but I'll watch and see on that how that particularly plays out there. As I said, I like to see them all moving in unison. I prefer to see them moving like that. Okay, it's the Russell, maybe just the weekly chart. Russell's looking very bullish there, isn't it? Okay, so as I said, Dow's bullish, Russell's bullish, S&P's kind of bullish, Nasdaq has been bearish. All right, so no surprise that we're kind of pushing back down. Okay, once we're pushed back down towards 18,000, that would I'd be saying that would probably be a level of interest. Let's just put that in. What I said in a big round number. Now, what you might be saying is that we'll actually pull, we're above the 18,000. Maybe if we on an intraday basis, if we were to come down, okay, and you have shorts, then there was effectively a short squeeze there at 18,000. Because it's a big round number, and the price action swings very strong. Well, then, as an intraday basis, that might be a trading opportunity up to the highs of Friday, the all-time highs of Friday, and stuff that So an intraday trader might be looking at a squeeze that way. And I'm just a little bit. Yeah, I'll just be watching that. As I said, these three are mostly bullish. Nasdaq maybe is just lingering a little bit, but yeah, we'll look at that. We'll come back at that in a moment. Let's have a little look at the dollar. All right. Whilst that works its way out, let's have a little look at the dollar. Show us what it's doing. So, of course, what we do have is, of course, tomorrow is the US CPI data. And that will probably be the big data that certainly most traders will be watching for, even though it's a very strong UK week. There'll be most traders that'll be watching for that. If we look at the dollar index on the weekly chart, here is here's a good example of this. Would be looking at that as a long squeeze, as a bull squeeze, which was also a double top at a significant level. Price looked as it just couldn't, and then you can see, basically all the people who've been buying here were covering their shorts. Okay, a little bit of reaction, and then bosh, away it goes. Okay, so that was just a good example of a long squeeze there, bull squeeze there. But what we look at for ourselves is this. What we've seen is the last few weeks has been very bullish for the dollar index, but last week, we've printed a kind of a bearish rejection candle, which if we look at the daily chart, if we look at the daily chart, this is what, having gone sideways and then exploded out, what we came, we're just, you might say we're in a kind of a little bit of an ascending triangle at the end of an uptrend there. Okay, so that's what we're kind of seeing there, how that's working. Certainly last week on the 4-hour chart, what I was looking at was just look at that. What I had been in trade to see was that kind of like a double top there, and then we kind of lower highs. Okay, and even though we started off the week with a nice bounce off the 50, it's kind of not really followed its through there. Yeah, thanks, Brennan. Thanks, Paul. Great session, Colin. Yeah, you're very welcome, Brennan. It was great to see you here. Okay, have yourself a good trading week. We're just looking at the dollar index there. Yeah, that to me is a bit of a wedge. It's a bit of a descending triangle at the end of an uptrend. Okay, and I think that has probably had an impact on people are just waiting for those CPI data tomorrow afternoon. Okay, the major people will wait for that, and that might be what gives us a stronger moves in both the dollar and the indexes, but then equally also across the board in terms of oil and gold as we see whether the dollar particularly continues to carry on in that bullish trend, or whether it's running out of energy. Certainly there is a kind of the way it's working there. Right? So of course, if we've had a push and then a bit of malaise, well, that's what we're seeing on the opposite side in terms of the euro against the dollar. Euro against the dollar here. I was looking to see if there's any kind of real big, or not on the weekly charts in terms of squeezes that may have shown. But euro and dollar on the daily chart, we've dropped down, squeezed between big round number 110, right? Squeezed between the 50 period moving average until it breaks, and then basically between the 50 and the 200, it comes back up and tests, and it drops and works its way down. And now we're, a little bit the opposite of the dollar index. Okay, the dollar index put in a little bit of a kind of a descending triangle after an uptrend. This is a little bit of an ascending triangle after a downtrend. Yeah, hopefully you can see there's a kind of a level of support there. You might actually say on the 4-hour chart, like a little bit of a flag, a little bit of a channel that it seems to be working its way up in, but it's still staying beneath the 50. Okay, the 4-hour 50. Okay, it's just still working its way down there. So that is so that is just a little bit of euro weakness there. Okay, still working its way in. When I look at it against the dollar against the Aussie, once again the daily chart has been working its way down. We've sat in the 200, we've broken through it, and now a little bit like that, just a little bit like the a little bit like the sort of euro chart that we looked at there. That is a bit of a ascending triangle at the end of a downtrend, okay, which is not, if you're looking at classical technical analysis, that wouldn't be showing it, but it's still a tradable pattern, okay. We're looking at there, and if we look at on the intraday, it's just mostly gone sideways, really. And as I said, I think that's probably what we will mostly see until after that CPI data tomorrow. I think that we're just having a little bit of a pause, a little bit of a different type of squeeze. We're coiling up before we make a move after those kind of after that US CPI data. That will be the catalyst for us there. Okay, so just back to the indices, you can see that Russell's effectively on a tear. There's a 30-minute, 15-minute chart, and Russell's really on a tear there. The Dow, okay, the Dow has come to like the kind of the previous highs, and it's just looked as if it's confirming. It looked on the 1 minute chart. I was looking to see whether it'd get false breakout and a move down, but actually we can see that all the lows are. It's grinding its way up, isn't it? Grinding its way up, and even on the 1 minute chart, I wouldn't necessarily say there's kind of any real sort of squeeze candles there in terms of if anything, everything's been very strongly bullish like that. So I'll watch how that particularly pivots. Let's have a little look at the kind of Nasdaq having come down to that area. Still, I would still say it's probably more on the kind of bearish side, but mostly it's just going sideways there. You can see that it's in a small range there between 1840, 1820, so like a 20 handle range. Okay, if you look at that for about the last 20 minutes, in about a 20 handle range. And that's probably, as I said, a bit of an indication of the big traders are probably recovering from their Super Bowl hangovers, and also B, just decided to wait for the CPI data on Tuesday before they kind of start to make any real big changes or real big moves in their trading. So there you go, ladies and gentlemen. As always, time flies when you're having fun. I hope that you have found that helpful. I hope you found that useful. I hope that's given you a little bit of education into what a squeeze is and the difference between a long squeeze and a short squeeze, and how and where and when they may occur, and what you're particularly looking for, so that you're in a position to turn it into an opportunity for yourselves. As always, I wish you the very best of success in your own trading, ladies and gentlemen. Have yourself a fabulous trading week. It's going to be a busy week, so make sure that you keep your powder dry and manage your risk correctly. And I look forward to speaking to you soon. Take care and trade well, everybody. Cheers.